All right, and now we welcome Piedmont Lithium. Piedmont develops critical battery-grade lithium hydroxide and other chemicals deemed essential to the EV and battery storage markets in the United States. Patrick Brindles, Executive Vice President and COO, will take you through the high notes. Patrick? Welcome.
Thank you. Thank you, Joanne. Afternoon, everybody. Appreciate you sticking around for late afternoon presentation from Piedmont Lithium. Always a great pleasure for me to be in Quebec City as a much wiser, younger young man of 23 years old. My wife and I made our first trip to Quebec for our honeymoon, and it's always a great pleasure to be back in the city, especially this time of year. I'd like to chat a little bit this afternoon about Piedmont Lithium and the value proposition that we present to prospective shareholders. Very quickly, Piedmont Lithium, founded in 2016 as an ASX listed company. As of May 2021, our primary listing has been moved to NASDAQ. We retain a secondary listing in Australia where we trade in CDIs. About 18 million shares on issue today, approximately $50 share price. I think this was Thursday. Friday share price down a little bit, as a previous speaker said. I think it's been a challenging time for pre-production companies in the market. So as others have probably said today, we feel that we're a bit undervalued. Market cap just under $1 billion US. About 90% of our trading volume is in the US. We finished the last quarter with $166 million in cash. We think that gives us plenty of runway to drive our portfolio of projects forward for the next 18 months and into a revenue-generating position sometime in the middle of next year. We're one of very few U.S.-based lithium development companies. We're the only U.S. company currently actively in advanced development of spodumene resource. We have intermediate plans to become the largest lithium hydroxide producer in the U.S., and our aspirational goal is to be the largest producer of lithium hydroxide in the U.S., to do that from spodumene concentrate, to have that spodumene concentrate come from mineral resources where the company has a substantial equity interest or potentially a controlling interest. Over time, from the period of 2023 to 2026, we would like to be producing or have control of offtake rights to about 500,000 tons a year of spodumene concentrate. That will convert to 60,000 tons a year of lithium hydroxide, plus some excess which we may put into the market or in collaboration with other strategic partners, potentially increase the opportunity for lithium hydroxide production to some multiple of 60,000 with a deployment of our core technology, which piggybacks off of Metso Autotech. The fourth bullet down, you can see potential for early cash flow. So we're a 25% project owner of North American Lithium together with our partners, Sayona Mining. We're actively spending currently to restart that mine with a view to be back into commercial production by the end of the first half next year. We also hold a 50% offtake right to spodumene concentrate produced from North American Lithium at a floor price of $500 per ton and a ceiling price of $900 per ton, which we think potentially over the next 2 or 3 years brings a substantial amount of value to Piedmont. We have a proven leadership team that's grown from 2019, when we were a staff of 4, to 32 people today, and continuing to grow. We expect the complement of technical staff to grow to somewhere between 50 and 60 personnel by the end of Q1 next year. As I mentioned at the start of the presentation, $166 million in cash at the end of Q1. That will give us quite a strong balance sheet to drive our portfolio of projects through into the end of next year. awful small, lots of bullets on the screen, but fundamentally it's an exciting time to be a developer in the United States, to have strategic assets in both the US and Canada. We have additional assets in West Africa, in Ghana. There's been a transformational shift in battery manufacturing capacity in the US over the last 18 months. In 2021, some $25 billion in terms of capital commitment in the US market for battery manufacturing capacity from a myriad of EV producers and battery producers, whether that's GM, Stellantis, LG, SK, Samsung, Tesla with their facilities in Austin. That translates into 2028 demand for lithium hydroxide in the US alone of 500,000 tons per year. Total US production capacity today is about 15,000, and if all US producers were successful reaching their aspirational goals, US production of lithium hydroxide in 2028 would equate to 300,000 tons per year, or only 60% of domestic demand. Quick overview of the projects in our portfolio. We were founded in 2016, underpinned by our Carolina Lithium project located in Gaston County, North Carolina. We own 100% of that project. It's at a feasibility stage of development today. We completed feasibility in December of last year. It's approximately $1 billion of CapEx, delivering some $2.8 billion in project NPV based on a long-term lithium hydroxide price of $22,000 per ton and a spodumene concentrate price of $1,200 per ton. That project is still working through its permitting requirements. We expect to be fully permitted sometime mid next year or into Q3 next year. We also, in 2021, acquired originally 19.9% of Sayona Mining, ASX listed, SYA. We currently control 14.5% of the equity of Sayona Mining, as well as a 25% interest in the Sayona Quebec assets of North American Lithium, AUTA, and Tansom. We're working with our partners now to restart North American Lithium, as I mentioned, with a first half 2023 restart. Forecasted production at NAL of just under 170,000 tons a year of spodumene concentrate, of which we have a right to 113,000 tons. Forecasted CapEx about $80 million US to bring that mine back into operation. In August of last year, we completed a transaction with Atlantic Lithium. That's an Australian company listed on AIM. We control 9.9% of the shares in Atlantic, as well as a 50% earn-in interest to the Ewoyaa project in the Cape Coast region of Ghana. That project is at a scoping level today with a forecasted production of 300,000 tons per year of spodumene concentrate, of which we hold a 50% offtake right on a life of mine basis. So when we add up between Carolina Lithium, Ewoyaa, and North American Lithium, Piedmont controls today approximately 500,000 tons per year of forecasted spodumene concentrate production. We want to translate that into 60,000 tons per year of lithium hydroxide plus. We have a development strategy over the period of 2023 to 2026 to bring our projects online sequentially, starting with the NAL restart in mid-year 2023, Atlantic Lithium in Q4 2024, a standalone lithium hydroxide plant that we call LHP2, supported by Ghana and Quebec in 2025, and lastly, in 2026, Carolina Lithium. The strategy is designed to take on projects of increasing capital intensity and increasing complexity sequentially, leveraging early cash flow from our spodumene concentrate production operations into success in our future chemical operations. To touch on each of the projects individually, North American Lithium, ATA, and Tansom. Again, North American Lithium we acquired out of bankruptcy in August of 2021 from Investment Quebec and CATL under a CCAA process. This project has had about 400 million Canadian invested in it over the life of operations. It closed in 2019, put into care and maintenance by CATL. Due to low spodumene concentrate prices, we have since committed to funding about 100 million Canadian in new CapEx, rehired a new management team, working with local contractors. We have about 40 people on site today, long lead equipment ordered. We've put the reclamation bond back into good working condition, underfunded by CATL for their period of ownership, and looking forward to the opportunity to be a producing asset next spring. 27 years of ore reserves at NAL, 119 million tons of mineral resources within the Sayona Quebec portfolio, including ATA. At Atlantic Lithium, the Owuya project is about 10 kilometers from the Atlantic coast. It's about 100 kilometers on the national highway to the deepwater port of Takoradi, shown in the aerial photo here. Takoradi has built a new bulk materials terminal, 900-meter berth, 18-meter draft. Our strategy will be to ship spodumene concentrate by truck to the port and transship to North America to East Coast U.S. port, and then by rail or truck to our LHP2 facility. Again, scoping level today at an approximate CapEx of $70 million US. We expect this to grow over time. That CapEx is dated to January of 2020. We plan to complete pre-feasibility study in late July of this year, followed by a application for mining license to the Ghanaian government in August or September. Target for FID upon completion of definitive feasibility study will be third quarter of 2023, with a forecasted place in service date of Q4 2024. Piedmont has the right to own a 50% project level interest in the Ghanaian assets of Atlantic Lithium by funding $17 million towards exploration and definitive feasibility study, followed by a commitment to fund 100% of the first $70 million of CapEx and a 50-50 sharing of any capital cost requirements thereafter. Our lithium hydroxide project called LHP2 was the second project that we contemplated based on permitting timelines and the availability of concentrate from Quebec and Ghana. This will be the first project that we build in the U.S. It'll be a standalone lithium chemicals facility, again, 30,000 tons per year of production capacity, deploying the Metso Autotech alkaline pressure leach technology, which we find has a more robust ESG profile through the elimination of sodium sulfate as a byproduct, fewer pieces of capital equipment, fewer reagents. Ultimately, when proved successful at a full commercial scale, we would expect would have lower OpEx versus conventional technologies in the market today. We will announce a site selection in the coming weeks. We're finalizing negotiations with our preferred state and municipality at this time. And concurrent with our site selection announcement, we will announce the results of a competitive process to award front-end engineering design and EPC award to a preferred contractor. Once we announce our site selection, we will proceed with permitting applications, and we expect that the permit process will take about 6 months for the standalone chemical plant. Our target is to be at FID by the end of Q1 next year, fully permitted, front-end engineering design completed, potentially with strategic partners selected, and we have applied for a loan under the Department of Energy's ATVM program for this project. We don't have a definitive timeline on when conditional commitment for debt funding might be made or if it will be made, but we look to about a 9-month timeline for that effort. Lastly, the largest project in our portfolio is Carolina Lithium. We own 100% of this project today in Gaston County, North Carolina. We're located in the so-called cradle of lithium from the 1950s to the 1980s. Most of the democratic world's lithium came from two very prominent mines within this Carolina tin spodumene belt. The Kings Mountain mine at the bottom of the belt, which is originally Foot Mineral Company, today owned by Albemarle. They've announced plans in the last 6 months to potentially restart that mining operation. And then about in the center of the page, the Hallman Beam mine, originally Lithium Corporation of America, then FMC for many years. That mine was closed in 1998. It's not owned by Livent today. It's rather owned by Martin Marietta, a large aggregate company in the United States. Our project encompasses some 3,300 acres of property ownership or rights to acquire. The permit application covers about 1,500 acres. It encompasses a fully integrated campus, 2 million tons per annum of run-of-mine ore, about 240,000 tons per year of spodumene concentrate, 30,000 tons per year of lithium hydroxide, and about 750,000 tons per year of various industrial mineral byproducts, including quartz, feldspar, and mica. Given the integrated nature of the campus, short transportation distances, availability of labor, reasonable costs for power and natural gas, and the ability to market byproducts, we believe that Carolina Lithium will be among the lowest cost producers of lithium hydroxide in the world. Again, about $1 billion in CapEx, about $2.8 billion in project NPV on an after-tax basis, but will be the fourth of 4 projects in our portfolio. We expect to be fully permitted sometime in the second half of next year, and depending on the activities of our other projects, we'll make an investment decision at some point after that. Just a summary table of the mineral resources and ore reserves in which we're invested, including 100% of Carolina Lithium, about 36% of Sayona, Quebec overall, including our 14.5% equity interest at the parent level and our 25% project interest, and then at Atlantic, a growing resource there of 30 million tons at 1.26% Li2O. We expect that to grow over time with a lot of interesting exploration targets surrounding Ewoyaa. The last thing that I will mention is that we continue to work through a strategic process with JP Morgan and Evercore, looking for strategic partners at both Carolina Lithium and LHP2. That process has been ongoing for about 9 months. We don't have a fixed deadline, but the company has received a significant amount of interest from prospective strategic partners, most of whom would be interested in long-term security of supply for U.S.-based lithium hydroxide manufacturing. And in parallel with that, we're advancing loan applications with the Department of Energy Loan Program Office under the ATVM program for both Carolina Lithium and for LHP2. We look forward to performing on our project timeline and our asset portfolio across 2022 and the first half of 2023, and becoming a revenue generator in the second half of 2023 through the restart at North American Lithium. Thank you very much.